Okay, let's unpack this. Have you ever looked at a stack of financial reports, just full of numbers and jargon, and wished someone could just, cut through it all?
And just tell you what really matters.
Exactly. That's what we're aiming to do in this deep dive for you.
Hmm.
Today, we're taking a closer look at the first quarter results for fiscal year 2025-26 from TVS Motor Company Ltd.
Yeah, a major player, obviously, in the global two- and three-wheeler market.
Definitely.
And to give you the most comprehensive picture, we've really gone through their official filings to the BSE and NSE,
Okay.
plus the independent auditors' reviews, both standalone and consolidated,
Great. The reviews.
and of course the company's own press release and their performance presentation. So quite a stack of sources.
Yeah, that gives us a pretty holistic view, doesn't it?
It does.
So our mission here is to pull out the most important nuggets of knowledge, maybe some surprising facts, too.
Helping you get well informed about TVS Motor's latest quarter without feeling, overwhelmed by all the data.
Precisely. So let's dive into these numbers, see what they tell us.
Okay.
So when we look at the big picture, Q1 FY26 for TVS Motor, it seems like a quarter defined by some pretty significant growth, record-breaking even.
Yeah, it looks that way.
The headline number that really jumped out at me was their operating revenue crossing the 10,000 crore rupee mark, first time ever.
That's a big milestone.
It is. From your perspective, what's maybe the most striking thing about that top-line growth? What does it hint at?
Well, it's a great question because, crossing a milestone is one thing, but the rate of growth here is, I think, particularly telling.
Okay.
Revenue grew by a pretty robust 20%. So that's RS. 10,081 crores in Q1 FY26, up from about 8,376 crores last year, same quarter.
20% is strong.
It is. But what's maybe even more significant is how efficiently that growth translated to profit. They also reported their highest ever operating EBITDA.
Ah, EBITDA.
Yeah, RS 12,263 crores. That's a 32% growth year over year.
Huge. Wow, 32%.
And that led to an operating EBITDA margin improvement too, about 100 basis points.
Oh.
So it reached 12.5% compared to 11.5% last year.
So it's not just more sales then, it's smarter operations behind it.
Exactly. That suggests more than just, increased volume. It points towards maybe disciplined cost management, operational leverage kicking in.
Right, that's a crucial distinction. And that efficiency seems to flow right down the P&L, doesn't it?
It does.
You're seeing profit before tax, PBT, soaring by 35% to R1,053 crores.
Uh-huh.
And profit after tax, the PIT, also grew by, well, same amount, 35%,
Yeah.
reaching 779 crores for the quarter.
Very healthy numbers.
So what implications does this kind of profitability have for their broader financial health? Thinking about the balance sheet, maybe.
Yeah, exactly. When you connect this to their overall financial health, the consolidated report actually shows some really encouraging improvements in key ratios.
Okay, like what?
Things often overlooked, but they're vital indicators, right? Like their net debt to equity ratio improved. It went from 3.16 last year to 2.61 this quarter.
Lower is better there, generally.
Generally, yeah.
Yep.
Signals less reliance on debt, a stronger
Mhm.
balance sheet, and their consolidated net profit margin also ticked up from 4.7% to 5.3%.
Better efficiency then.
Exactly. Better efficiency converting revenue into actual profit.
Right.
And on the standalone side, their net worth increased significantly too,
How much?
from about 8,283 crores last year to over 10,723 crores this year, Q1 to Q1.
Wow.
So these are all signs, really, of strengthening financial fundamentals. Gives them more flexibility for future investments,
That's a very clear picture of, financial robustness. Okay, let's switch gears a bit. What's actually driving these impressive numbers? Sales volume.
Right, the core business.
TVS registered its highest ever quarterly sales across the board. Overall, two-wheeler and three-wheeler sales grew 17%.
Which is huge volume, 12.77 lakh units,
Okay.
up from 10.87 lakh last year.
And just a reminder for listeners, 1 lakh is 100,000 units, so over 1.2 million units in one quarter.
Massive numbers.
So which segments are really pulling their weight here?
Well, the growth is actually remarkably consistent across their main segments, which, speaks to broad market demand.
Okay.
Motorcycle sales grew by a robust 21%. That's 6.21 lakh units.
Still the biggest segment then.
Yeah. Scooter sales also saw a solid increase, 19%. Just under 5 lakh units, 4.99.
Also very strong.
But maybe the most compelling story here is the three-wheelers. Exceptional growth there, up 46%.
46%, wow.
Yeah, to 0.45 lakh units. It's smaller volume overall, but that rate of growth is significant.
Definitely shows diversification, not reliant on just one thing.
Exactly. Makes their overall sales performance feel more resilient.
That 46% jump in three-wheelers is quite a standout, absolutely. And what about the EV segment, the electric vehicles? How significant is that contribution becoming?
Oh, it's extremely significant. And it really highlights TVS's agility, I think, in adapting to this whole shift towards sustainable mobility.
Right.
Electric scooter sales specifically grew by 35%, reaching 0.70 lakh units in the quarter. That's up from 0.52 lakh the prior year.
70,000 electric scooters.
Yeah. And it's not just a number, right? It shows TVS is successfully capturing a really fast-growing segment. With governments pushing electrification, consumers getting more conscious, having this strong foothold gives them a crucial edge.
Kind of future-proofing part of their business.
You could say that, yeah, against maybe more traditional players who are slower to adapt.
Fascinating how that EV growth provides, a crucial hedge. But these sales figures, they don't just happen in a vacuum, right?
No, definitely not.
Let's shift focus from the what to maybe the how, the strategic decisions behind this performance. I noticed the board approved raising funds up to 500 crores through NCDs, non-convertible debentures.
That's right, via private placement.
So what's the strategic thinking there? Choosing NCDs, what does that signal?
Well, raising funds through NCDs, which are basically debt instruments, it usually indicates a strategic move to get capital without diluting equity.
Right, not issuing new shares.
Exactly. It suggests the company's confident in its ability to generate future cash flow to, service that debt.
Okay.
And it lets them fund growth, maybe expanding manufacturing, R&D for new models, supporting global expansion, whatever it might be, without impacting existing shareholders too much.
So a sign of a proactive approach to their capital structure.
I'd say so, yeah.
Okay. So they're looking to fund growth without giving up more ownership. And speaking of growth, they made some significant investments during the quarter, too.
Yeah, they did.
In their subsidiaries, what was it, 477.68 crores? And another 85.65 crores in TVS Supply Chain Solutions Limited.
Yeah, those investments point to a pretty clear strategy, I think. Strengthening their whole ecosystem and maybe diversifying revenue streams.
How so?
Well, investing in their own subsidiaries suggests, core business expansion or maybe new ventures. While the investment in TVS Supply Chain Solutions, that highlights a focus on perhaps vertical integration or just strengthening their logistics.
Which could lead to better efficiency, cost control.
Exactly. Or even new business opportunities outside of just making the vehicles. We also saw some corporate restructuring.
Oh, yeah.
Several of their international subsidiaries mainly focused on e-mobility, like Swiss E-Mobility Group, Alexandro, the Go Corporation. They merged into TVS E-Bike Company AG.
Okay, consolidating the e-bike efforts.
Seems like it. Probably allows for a sharper focus, more streamlined operations within that personal e-mobility segment.
Makes sense.
And just a quick note, while we're on the reports about the auditor's review.
Okay.
While the overall consolidated results had a limited review, some of the interim financial info for, I think it was 16 subsidiaries and 4 associates.
Mostly outside India.
Yeah, particularly those outside India. They were based on management certified accounts, which isn't uncommon for big global companies, but it's just a detail worth noting if you're really digging deep.
Right. Good context. Now, as fascinating as these numbers are, it's also crucial to look beyond the financials, isn't it?
Absolutely. Brand building, innovation, global footprint.
Exactly. What are some of the key brand and product updates that maybe caught your eye this quarter?
Well, there's quite a bit happening on that front. Shows they're focused on innovation and, customer connection. For instance, the TVS Jupiter 110 was recognized as India's most awarded scooter.
I saw that.
And they even supported that with an all-AI campaign, which is kind of a neat tech integration.
Interesting use of AI there.
Yeah. And the TVS Apache brand celebrated 20 years, reached 6 million racers worldwide. That shows incredible longevity, brand loyalty.
6 million, wow.
And the TVS Ronin, their sort of retro-style bike, launched a new helmet collection inspired by Indian cultural heritage.
Smart blending of product and culture.
Yeah, resonates with the audience. Plus, they rolled out new variants. Jupiter 125, dual color, new Apache models. RTR 160 with dual-channel ABS. The R310 with more race-tuned features.
So continually refreshing the lineup, keeping things interesting.
Exactly. Shows they've got a pulse on the market.
Definitely. But what about their global ambitions? Are we seeing more strategic moves beyond India?
Absolutely. Their global reach continues to expand pretty significantly, it seems.
Where are they focusing?
Well, the TVS iQube electric scooter, a really key product for them now. It was launched in Indonesia.
Indonesia, okay. Big market potential there for EVs.
Huge potential. So that's a crucial step. And then consider the visibility Norton Motorcycles got.
The UK brand they own.
Right. The group company based in the UK. It was showcased to PM Narendra Modi and the UK's PM Keir Starmer during the India-UK Free Trade Agreement discussions.
That's high-profile stuff.
It really is. That kind of platform undoubtedly boosts their international brand recognition.
Quite the endorsement, yeah. And beyond the buzz, what about the sort of underlying operational strengths, sustainability, manufacturing?
Yeah, if you connect this to their broader operations, TVS Motor also picked up some significant recognition there too.
Like the CII awards.
Exactly. They won the CII National Award for Future Ready Manufacturing 2025. Speaks to a forward-thinking approach. And maybe even more impressively, all 3 of their manufacturing units in India achieved water-positive certification from CII.
Water positive, okay. That's big from an ESG perspective.
It is. These aren't just, plaques on the wall. They signal a deep commitment to operational integrity, resource efficiency, ESG principles.
Which investors increasingly care about.
Absolutely. Important for long-term business resilience.
And it fits their reputation, right?
Yeah.
TVS Motor is, after all, the only two-wheeler company to have won the prestigious Deming Prize for quality.
That's right.
And their products consistently lead in those J.D. Power surveys for customer satisfaction. It's a company known for quality.
Definitely a long history there. And ultimately, all these initiatives, the strong financials, they're supported by TVS Motors. Pretty broad operational reach now, across 80 countries.
80 countries. That really emphasizes their global ambition and diversified market presence.
Give them multiple avenues for continued growth, doesn't it?
It certainly seems that way. So what does this all mean when we pull it together? What's the takeaway?
Well, I think this deep dive really reveals a quarter of significant, maybe even record-breaking growth for TVS Motor.
Driven by strong sales across the board.
Right, particularly those electric scooters we talked about. And it's all backed by, strategic financial moves and a continued focus on innovation and global expansion.
A pretty comprehensive picture of a company firing on multiple cylinders.
I think so. And looking at that performance, both traditional and electric, and their ongoing investments, it raises an interesting question for the listener, perhaps. What do you see as the biggest long-term opportunity? Or maybe the most significant challenge for TVS Motor in this constantly evolving global mobility landscape? Where do they go next?
That's a fantastic question to ponder. Where do they go next? We hope this deep dive gave you some valuable insights today.
And sparked your own curiosity about TVS Motor Company's trajectory.
Definitely plenty to think about.